Hello, today is Saturday, 26th of February 2022. Let's start with our disclaimer, go over our calls, and then make some predictions. This is my trading plan for Monday the 28th when the market reopens. Remember, I can be wrong. Any trade one makes should be at one's own risk. Look for the pattern with the early low, which is this. Monday, we're looking for the pattern with the early low once again. We had a price target, 4186.6. The rule is if we gap smartly in the undesired direction, there's still this target, but no longer the time. So that call for it to print Friday was killed before the open. We have some new targets, 43.56.26 and 43.10.45. If we don't gap up on Monday, we'll be looking for these numbers. We did satisfy an old target from a week ago, 43.85.10. The way we satisfied it was quite suspicious. We hovered under it all day long. This is a resistance area in addition to a target. Hovered under it all day long, and then right near the end broke through and promptly dropped. The implication is that professionals were repelled by this resistance, weren't willing to buy, but once liquidity dried up, there were still amateurs who were willing to pay the price. Now, resistance doesn't always hold, but if we don't gap up over these highs, I look for lower prices on Monday, and those are my numbers. But again, a rally like this doesn't have to stop on a dime, and I can't say gapping up is impossible. I'm just saying there's a lot of resistance, and if you don't break through it with a gap, probably you're going to trade lower, even if you don't close lower. I've corrected the close here. I had it before on Thursday's close. It's pretty much the same as the target. Well, let's see what MEJT had to say. Early on, there was a buy signal and an ultimate buy signal. Those did work, but the system says the move is unsustainable, and by early Tuesday calls for 43.10.45. We had an ultimate buy signal in the afternoon as well, but we got the minimum right away. We didn't have to go any higher, and the move is called false, meaning it won't stick. Gives us a target of 43.56.26. We have a reversal bar involving the lower Bollinger Band. When it's flat, that's kind of iffy at this point. When it's flat, my target is a challenge of the upper bar. If it's not flat, that doesn't have to work. Yesterday it looked pretty flat to me. I'm not so certain about that now. But in any event, there's a new one of Tom DeMark's TDST lines. It's the resistance area, 45.26.33. There's resistance at the line and one bar past the line. So even if we do rally up to that point, that's where you look for resistance. You're not obligated to go that high, though. Well, once again, we have the volume spike, which is indicative of being a low. You don't have to go up for a long time, but it generally occurs pretty close in terms of time to when market lows are seen. I don't think this low is going to hold. We don't have to worry about that now. Here's our long-term count. We had the wave green A, we have green B, and we're now in wave green C. So let's focus in on that. Well, here's B. If you measure from the high to this low, there's often a Fibonacci retrace. Right now we stopped right at the 38.2% retrace. When you draw your Fibonacci grid in there, you can see the hits we got from the prior consolidation. There are a number of logical places for this rally to stop. One's 38.2, and that's where we are now. So that's one candidate. Next candidate's the 50%, which is also the 200-day moving average. It's around 44.66. And the last one's a 61.8% retracement, 45.49. That's pretty close to the TDST line resistance that we showed. And if we did get around this area, we'd knock off some more MEJT targets, which offer resistance as well. So we probably aren't going to go very much past around 45.50-ish at the most. But if we go there and you're short, that would be pretty painful. So right now we're at one resistance from that. We're at one resistance from the MEJT line. This is just a blow up of the last one. It shows the ABC down. It shows us stopping right at 38.2%. And this chart shows that this high is also a Fibonacci target of the prior consolidation. Here's your 38.2, here's your 61.8, and there's your high. So we do have a lot of Fibonacci resistance at this high. We have the resistance from the MEJT target. We have the very suspicious rally to resistance right at the end. All these, and we have lower MEJT targets. So resistance doesn't have to hold, and usually when you rally like this on a Friday, you're going to keep on rallying on Monday. That, in my opinion, would require gapping up. But there's a lot of resistance here, and if we don't gap up, I look for lower prices, and perhaps much lower prices, because when you don't follow through on a Friday advance like this one, and if you gap down smartly instead, it tends to be pretty negative. Now, I don't have any great rules for predicting what happens over the weekend, so I'm not going to say if we do gap down or gap up. But if we don't gap up, I think we're going to pull back perhaps significantly. Monday's pattern has the early low. We could still gap up. Typically it's a rally day, high in the final hour, and if it's weak, more weakness tends to follow in subsequent days. There are lower targets. Unless we gap up smartly, the rules call for them to print. Friday's rally stopped at an area of strong Fibonacci and MEJT resistance. Timing of the late break to a new high today was suspicious. If the rally is to continue unabated, we should gap over resistance on Monday, and that means over yesterday's highs. It's not impossible, as we appear to have just made a significant low. If we don't gap over the high, we a short-term negative would imply lower prices before the rebound resumes. So typically it's a day with an early low and a late high, but the late high doesn't have to be over the early low. And if you're long this market, you want us to gap up. Otherwise, I think we'll hit lower prices when we have our targets. And that is today's call.